Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Can you deduct the sales tax you paid on a new or used vehicle on your federal tax return? The short answer is yes, you might be able to, but it's not a straightforward deduction and it comes with some major conditions. It all comes down to something called the state and local tax deduction, or SALT deduction. When you file your taxes, you have to make a choice. You can either deduct your state and local income taxes, or you can deduct your state and local sales taxes. You cannot deduct both. For most people in states with an income tax, the income tax deduction is usually the higher, better choice. However, if you live in a state with no income tax, like Texas, Florida, Washington, or Nevada, choosing the sales tax deduction is a no-brainer. This is also where a big purchase, like a car, comes into play. If the sales tax you paid on a new car, boat, or RV was substantial, it might make your total sales tax deduction for the year larger than your state income tax deduction. Here's how you figure it out. You don't have to save every single receipt from the year. The IRS has tables that give you a standard sales tax deduction amount based on your income and your state. The key is that you can take that standard amount from the table and then add the actual amount of sales tax you paid on major purchases, like a vehicle, to that standard amount. This is what can make the sales tax option more valuable. But now for the two big hurdles you have to clear. First, you can only take the SALT deduction if you itemize your deductions instead of taking the standard deduction. Since the standard deduction was increased significantly a few years ago, far fewer people find it beneficial to itemize. You have to run the numbers to see if all your itemized deductions, like mortgage interest, charitable donations, and these state taxes add up to more than your standard deduction amount. Second, and this is the biggest roadblock for many, the total SALT deduction is capped at $10,000 per household per year. This cap includes your property taxes plus either your state income or sales taxes. So, if you already pay more than $10,000 in state and local property and income taxes, you're already maxed out, and deducting the vehicle sales tax won't provide any extra benefit. To recap, you can potentially deduct your vehicle sales tax, but only if you itemize, only if you choose to deduct sales taxes instead of income taxes, and only if your total state and local tax bill is under the $10,000 cap. Thank you so much for watching. If this video helped you understand this tricky tax topic, please give it a thumbs up and be sure to subscribe to the channel for more simple explanations of personal finance and tax questions.